You stare at the chart. The setup looks perfect. Every indicator aligns. You know the rules, you know the plan, but your finger hovers over the mouse, and something inside you whispers, what if you're wrong this time? What if the move happens without you? So you enter early, you exit too soon, you chase, you override, and by the end of the week, you're not losing because you don't know what to do. You're losing because you can't sit still long enough to let what you know actually work. Most people think trading is about reading charts, understanding markets, or having the right strategy. And those things matter, but they're not the problem. The problem is that trading punishes action and rewards stillness, and your brain is wired to do the opposite. You're designed to move when you feel uncertain, to act when you feel threatened, to do something when doing nothing feels like failure. And the market knows this. It knows you'll blink first. This isn't about discipline. It's not about controlling your emotions through sheer willpower. It's about understanding that your nervous system is playing a game your strategy never prepared you for. And until you understand that game, you'll keep losing to yourself before the market even has a chance to beat you. Let's start with what actually happens in your brain when you're waiting. Not what you think happens, what actually happens. You open a position. Your analysis was solid. Your entry was clean. Your stop is placed. Your target is set. Everything is done. Now all you have to do is wait. But waiting doesn't feel neutral. It feels like something. It feels like tension building, like a question that needs answering. And the longer you wait, the louder that question becomes. Your anterior cingulate cortex, the part of your brain that monitors for conflict and uncertainty, starts firing. It's scanning for danger. It's asking, is this still safe? Should we still be here? And every small price movement feeds that scan. A 5-pip move against you isn't just 5 pips. It's data. It's a signal. And your brain interprets signals as meaningful, even when they're just noise. So you start creating narratives. Maybe the trend is reversing. Maybe I was wrong about support. Maybe I should tighten my stop. None of these thoughts come from analysis. They come from activation, but they feel rational. That's the trap. Now imagine you're watching this happen in real time. You're at your screen, price is moving, and every movement feels like it's asking you a question, and your brain wants to answer, because answering feels like control. Doing something feels like you're managing risk, but you're not managing risk, you're creating it. Because every adjustment, every early exit, every moved stop is a decision made from a state of activation, not clarity. And over time, those decisions compound into a losing pattern that you can't see because you're inside of it. This is why most traders don't lose because they lack knowledge. They lose because they can't stop interfering with what they already know. And that interference doesn't come from ignorance. It comes from the way your nervous system processes waiting. Imagine 2 traders. Both have the same strategy. Both have the same capital. Both have spent years learning technical analysis, reading books, studying risk management. On paper, they're identical, but their outcomes couldn't be more different. The first trader, let's call him Michael, treats trading like a performance. He wakes up early. He's at his desk by the time the London session opens. Multiple monitors, multiple pairs. He's scanning constantly. He tells himself he's being thorough, that he's staying on top of the market. But what he's really doing is feeding his system a constant drip of stimulation. Every price movement, every news headline, every tick is information his brain has to process. And processing creates arousal. Arousal creates the feeling that something needs to be done. So Michael takes a trade. The setup is decent, not perfect, but close enough. He enters, and then he watches. He watches the 1-minute chart. He watches price bounce around his entry. He watches it go a few pips into profit, then pull back. His chest tightens. His breath shortens. He tells himself he's just being attentive, but his nervous system is doing something else. It's interpreting every small movement as a potential threat, and the longer he watches, the more threatened he feels. Price drops 10 pips below his entry, still within his stop, but those 10 pips feel like a warning, like the market is telling him he's wrong. So he exits, manual close. He tells himself he's cutting losses early, being smart, but he's not. He's just reacting. And an hour later, price reverses and hits where his target would have been. He sees it happen, and instead of learning that waiting works, he learns that the market is unpredictable, that his timing was just off. So next time, he watches even closer. He tries to time it better, and the cycle deepens. By the end of the month, Michael has taken 80 trades. His win rate is 40%. His average winner is smaller than his average loser because he keeps cutting winners short and letting losers ride just a little too long, hoping they'll come back. He's exhausted, he's frustrated, and he's convinced the problem is his strategy, so he starts looking for a new one, a better indicator, a clearer signal. He doesn't realize the strategy was never the problem. The problem is that he's been trading from a state of chronic activation for 30 days straight, and no strategy works when you're executing it from that state. Now let's look at the second trader. Her name's Elena. She has the same strategy as Michael, same market conditions, same everything, but her day looks completely different. She wakes up, but she doesn't open her charts first thing. She makes coffee. She writes in a journal for 10 minutes, not about trading, just thoughts, whatever comes up. This isn't some productivity hack, it's a nervous system regulation tool. She's starting her day in a low arousal state, and that state becomes her baseline. Around 9, she opens her trading journal from the night before. She already wrote down the setup she's waiting for, specific pairs, specific conditions. She's not looking for opportunities, she's looking for confirmation that the opportunity she already defined has appeared. This is a crucial distinction. Michael is hunting, Elena is recognizing. Hunting requires activation, recognition requires calm observation. She opens her charts. She checks 3 pairs. On the second one, her setup is there. Clean breakout, volume confirmation, everything aligns. She enters. She sets her stop. She sets her target. And then she does something Michael would never think to do. She closes the platform. Not forever, just for now. She sets a timer for 2 hours and she goes and does something else. She works on a design project. She goes to the gym. She reads. It doesn't matter what. What matters is that she's removed herself from the noise. Her brain isn't tracking every tick. Her nervous system isn't interpreting every 5-pip move as a referendum on her intelligence. She's not hoping the trade works. She's not visualizing the profit. She's just living her life while the trade does what it's going to do. And 2 hours later, her alarm goes off. She checks. The trade hit her target. She logs it. She moves on. No drama. No emotional roller coaster, just execution and result. But here's what's even more interesting. Sometimes she checks and the trade hit her stop, and when that happens, she feels almost nothing. Not because she doesn't care, but because she wasn't activated during the process. She didn't spend 2 hours in a state of hope and fear. She just placed a bet based on her analysis, let the market decide, and accepted the result. Her nervous system never spiked, so there's no crash, no frustration, no need to recover. She just moves on to the next analysis. Over the course of the same month, Elena takes 19 trades. Not 80, 19. Her win rate is 55%, not because she's better at analysis, but because she only takes the trades that actually match her criteria. She's not filling time. She's not trading because she's bored or because she feels like she should be doing something. She trades when her setup appears, and the rest of the time, she waits. And waiting doesn't cost her anything because she's not spending that time activated. By the end of the month, Michael is burned out and looking for a new strategy. Elena is profitable and refining the one she has. Same information, same market, different nervous systems, different results. Now let's go deeper into what's actually happening here. Why does watching the trade make it harder to hold? Why does proximity to price action interfere with execution? It has to do with something called the Somatic Marker Hypothesis. Your brain doesn't process decisions purely logically. It attaches physical sensations to outcomes. When you see price move against you, your body feels something: tightness, tension, discomfort, and your brain tags that feeling as danger, not because you're actually in danger, but because uncertainty feels like danger to a system that evolved to keep you alive. The problem is, your brain doesn't distinguish between real danger and abstract danger. Whether you're being chased by a predator or watching your trade go 5 pips underwater, the activation pattern is similar. Your amygdala flags it, your body tenses, and your prefrontal cortex, the part that's supposed to make rational decisions, gets overridden. Not completely, but enough. Enough that you start rationalizing action. Enough that moving your stop feels reasonable. Enough that exiting early feels prudent. And here's the insidious part. You don't feel like you're panicking. You feel like you're being smart, like you're adapting, like you're reading the market. But you're not reading the market. You're reading your own discomfort. And you're making decisions to resolve that discomfort, not to follow your plan. This is why traders who watch every tick consistently underperform traders who check in periodically. It's not that watching gives you bad information, it's that watching activates a system that doesn't care about your edge over 100 trades. It only cares about resolving the tension right now. And the only way to resolve that tension is to act, to do something, to close the position, to move the stop, to feel like you have control. But that illusion is an illusion because the market is going to do what it's going to do whether you watch it or not. So the traders who win aren't the ones who watch more carefully. They're the ones who've learned to look away. And looking away isn't avoidance, it's strategic disengagement. It's protecting your execution from your own reactivity. There's another layer to this that most people miss. It's not just about what happens during the trade, it's about what happens before you even enter. The state you're in when you make the decision to trade determines the quality of that decision more than the setup itself. If you're entering a trade because you're bored, because you feel like you should be doing something, because you haven't traded in a few days and you're getting anxious, that trade is already compromised, not because the setup is bad, but because your reason for taking it isn't aligned with your strategy. It's aligned with your discomfort. Michael takes trades to feel productive. Elena takes trades because the criteria are met. That's the difference. And that difference compounds over weeks and months into completely divergent results. Michael ends up with a journal full of trades that were almost setups, almost good enough, almost right. And he can't figure out why his edge isn't playing out. But it's not playing out because he's not giving it a chance. He's interfering before the process even starts. Elena's journal looks different. Fewer trades, but every single one of them matches her criteria exactly. She's not bending the rules. She's not talking herself into marginal setups. She's waiting for the pitch she can hit. And because she only swings at those pitches, her contact rate is higher. It's not that she's more talented, it's that she's more selective. And selectivity isn't about discipline. It's about designing a process that makes it easy to be selective. Here's how that process actually works. It starts the night before. Elena doesn't just glance at the charts before bed. She sits down with her journal. She reviews what happened that day, not just winning or losing, but how she felt, what was hard, what was easy. Did she override any rules? If so, why? This isn't self-criticism, it's data collection. She's learning her own patterns, and over time those patterns become visible. She starts to notice that she overrides her rules most often after a losing trade, or when she's been away from the screen for a few days, or when she's tired. These aren't weaknesses, they're just conditions. And once she knows the conditions, she can plan around them. Then she looks forward. She checks the economic calendar. She notes any high-impact news events. She looks at the pairs she trades and identifies key levels, support zones, resistance zones, areas where her setups tend to form. And she writes down very specifically what she's waiting for. Not vague things like bullish momentum or good entry. Specific things. Price needs to break above this level with a close on the 4-hour chart. Volume needs to confirm. RSI needs to be out of overbought territory. She defines it so clearly that when she looks at the chart the next day, she's not making a decision. She's just checking if the conditions exist. This is pre-decision, and pre-decision is the most underrated skill in trading. Because if you wait until you're looking at the chart to decide whether to take the trade, you're deciding from a state of arousal. The chart is moving, the candles are forming, your heart rate is elevated. And in that state, you will make worse decisions than you would make the night before when you're calm and detached. So the real decision isn't whether to enter. The real decision is what conditions have to be met for you to enter. And that decision is made when you're not activated. The next morning, Elena doesn't rush to the charts. She starts her day slowly. She does something that has nothing to do with trading: a walk, stretching, cooking breakfast, something physical and calm. This isn't procrastination, it's priming. She's setting her nervous system to a baseline that isn't reactive. And that baseline matters because it determines how she interprets information for the rest of the day. When she finally opens her platform, she's not excited, she's not anxious, she's just neutral. And neutral is the ideal state for pattern recognition. She checks her 3 pairs. If the setup is there, she enters. If it's not, she closes the platform. She doesn't scan other pairs, she doesn't look for something else, she doesn't adjust her criteria to fit what's available. She just closes the platform and moves on with her day. And this is where most traders fail. Because most traders can't tolerate a day where nothing happens. It feels like wasted time, like they're not doing their job. But in trading, doing nothing is often the job, and the traders who can't accept that will always overtrade. When Elena does enter a trade, her process continues. She sets her stop and target. Then she removes temptation. Some traders do this by setting alerts. Some do it by physically leaving their workspace. Elena uses a combination. She has an alert set if price hits her stop or target. And she has a rule. She can check the trade once at a predetermined time. Not whenever she feels like it, not when she's curious. Once, at 3 p.m. That's it. And this rule isn't arbitrary. It's designed to prevent her from watching price move and creating narratives about what it means. Between entering and checking, she does other things. She works on her analysis for tomorrow. She studies past trades. She reads. She lives her life. And during this time, she's not thinking about the trade. She's not hoping, she's not worrying, because she's learned that emotional energy spent hoping for a trade to work is the same energy that makes you exit early. It's the same activation, just directed differently. So she conserves that energy. She stays neutral. And neutral is powerful because it's sustainable. At 3 p.m., she checks. If the trade is still open and everything looks fine, she closes the platform again. If it hit her target, she logs it and moves on. If it hit her stop, she logs it and moves on. No story, no drama, just data. And this is where Michael struggles, because when Michael's trade hits his stop, it's not just data. It's a narrative. It means something about him, about his intelligence, about whether he's cut out for this. So he dwells on it. He replays the trade in his mind. He questions his analysis. And all of that emotional processing drains him. It makes the next trade harder because he's carrying the weight of the last one. Elena doesn't carry weight, not because she doesn't care, but because she's separated outcome from identity. A losing trade doesn't mean she's a bad trader. It means the market didn't cooperate with her analysis this time. That's it. And because she can hold that perspective, she can move on cleanly. No recovery period, no emotional hangover. Just on to the next analysis. Now let's talk about what happens when you don't build this kind of rhythm. When you trade from activation instead of calm, when you watch instead of wait. The consequences aren't immediate. That's part of why it's so hard to see. You don't blow up your account in one day. You erode it slowly, trade by trade, decision by decision. And the erosion is so gradual that you don't notice it's happening until you look back at 3 months of data and realize you've been spinning your wheels. Michael's account balance after 3 months is almost exactly where it started. He's made money on some trades, lost money on others, but the net result is flat, and he can't understand why. He's putting in the hours, he's watching the market, he's learning, but his equity curve isn't moving. And the reason is simple. He's been trading from a state of chronic stress for 90 days, and stress makes you short-sighted. It makes you cut winners because they feel good, and you don't want to lose that feeling. It makes you hold losers because admitting you're wrong feels worse than the financial loss. And it makes you take marginal trades because doing something feels better than doing nothing. All of these are invisible in the moment. They feel like reasonable decisions, but over time they add up to a pattern. And the pattern is you're getting in your own way. Not because you're undisciplined, but because you're overstimulated. And no amount of willpower can overcome chronic overstimulation. You can't willpower your way out of a nervous system that's been hijacked. Elena's account after 3 months tells a different story. She's up 18%, not because she trades more, she trades less. Not because she has a better strategy, she has the same strategy, but because she executes it from a state that allows the edge to play out. She's not interfering, she's not second-guessing, she's not creating friction between her plan and her execution. And that lack of friction compounds into consistent results. But here's what's even more important. Elena isn't just more profitable, she's calmer. She enjoys her life more. She doesn't think about trading when she's not trading. She doesn't dream about charts. She doesn't feel a pit in her stomach on Sunday night before the markets open. Trading is a part of her life, but it's not consuming her life. And that's possible because she's built a rhythm that works with her nervous system instead of against it. Michael, on the other hand, is exhausted. He's thinking about trading all the time. He's checking charts on his phone during dinner. He's waking up in the middle of the night to see what happened in the Asian session. He's irritable with the people around him because he's carrying the stress of every open position. And he doesn't realize that this isn't normal. He thinks this is what it takes. He thinks this is what serious traders do. But it's not. It's what traders who don't understand their own nervous systems do. And it's not sustainable. Eventually, something has to give. For most traders like Michael, it's not a dramatic blow-up. It's a quiet burnout. They just stop. They close their account. They tell themselves trading isn't for them, and they move on. And they never realize that they weren't bad at trading. They were bad at managing their relationship with uncertainty. And that's a learnable skill, but you can't learn it if you don't know it's the problem. There's another consequence that's less obvious, but just as damaging. When you trade from activation, you stop trusting your analysis, because your analysis says one thing, but your actions say another. And over time, that gap creates doubt. You start questioning whether your strategy works, whether your rules make sense, whether you even know what you're doing. And that doubt is corrosive. It makes every decision harder. It makes every trade heavier. And eventually, you're not trading your strategy anymore. You're trading your anxiety. And anxiety has no edge. This is why so many traders jump from strategy to strategy. They think the problem is the method, but the method was fine. The problem was they never gave it a chance to work because they kept interfering. And they kept interfering because they were watching too closely, trading too often, and staying activated too long. So they abandon a perfectly good strategy in search of one that feels easier. But no strategy feels easy when you're executing it from the wrong state. The shift happens when you stop trying to control the market and start trying to control your proximity to the noise. When you realize that your edge isn't in predicting what price will do next, it's in setting up conditions where you're likely to be right more often than you're wrong, and then having the patience to let those conditions play out without interference. And that patience isn't a character trait, it's a design choice. You design for patience by reducing exposure to moment-to-moment price movement, by deciding in advance instead of deciding in the moment, by checking periodically instead of watching continuously, by doing other things during the trade instead of obsessing over it, by separating your identity from your outcomes, by building a rhythm that keeps your nervous system regulated instead of constantly spiking it. And when you do this, something shifts. Trading stops feeling like a battle. It stops feeling like you're constantly fighting yourself. It becomes quieter, simpler. You start taking fewer trades, but better ones. You start feeling less during the trade, but more confident in the process. You stop needing to know what's going to happen next because you've accepted that you can't know. And that acceptance is liberating, because once you stop trying to control the uncontrollable, you can focus on the part you do control, your process. The traders who last aren't the ones who feel the least. They're the ones who've learned to feel without reacting, who can sit with uncertainty without needing to resolve it through action, who can watch a trade go against them temporarily without panicking, who can watch a trade go into profit without celebrating too early. They've learned to stay in the middle, not numb, just calm. And calm is a superpower in a game designed to make you react. Here's what that looks like in practice. You have a trade open, price moves against you. You feel it, the tightness in your chest, the urge to check if your analysis was wrong. But instead of checking, you notice the feeling. You name it: anxiety, uncertainty, fear of loss. And then you do nothing. You let the feeling be there. You don't try to make it go away by closing the trade or moving your stop. You just let it exist. And after a few minutes, it fades. Not because the trade moved in your favor, but because feelings always fade if you don't feed them. This is emotional regulation, and it's not about suppressing emotion. It's about creating enough space between the feeling and the action that you can choose what to do instead of just reacting. And that space is built through practice, through deliberately putting yourself in positions where you feel the urge to act and then choosing not to, through learning that you can tolerate discomfort without needing to resolve it, through proving to yourself over and over that waiting works. And over time, something remarkable happens. The urge to act gets quieter. Not because you've become some emotionless robot, but because your nervous system has learned a new pattern. It's learned that uncertainty doesn't require action, that discomfort isn't danger, that waiting is safe. And once it learns that, trading becomes easier. Not because the market got easier, but because you're not fighting yourself anymore. You start to notice that your best trades are the ones you think about the least, the ones where you enter, set your levels, and forget about it until the alert goes off. And your worst trades are the ones you obsess over, the ones you watch tick by tick, the ones you adjust and override and second guess. And once you see that pattern clearly, you can't unsee it. And you start structuring your process around that insight. You start treating screen time as a limited resource, not something to maximize, but something to ration. You start valuing the time you spend away from the charts as much as the time you spend analyzing them, because you realize that the work isn't in watching, the work is in preparation, in analysis, in defining your criteria, in waiting for those criteria to be met, and once they're met, the work is in getting out of the way. This is the hidden principle that most traders miss. The market doesn't reward effort, it rewards alignment. You can work 16 hours a day and lose money if your effort is misaligned with what actually matters. Or you can work 2 hours a day and make consistent returns if those 2 hours are focused on the right things. And the right things are finding high-probability setups, executing them cleanly, and then stepping back. Everything else is noise. Michael never learned this. He kept equating effort with results. More screen time, more trades, more analysis. And he burned out before he ever figured out that more isn't better. Elena learned it early. She learned that trading rewards patience more than it rewards intelligence, that it rewards calm more than it rewards speed, that it rewards selectivity more than it rewards activity. And once she aligned her process with those truths, everything got easier. If you've been trading for a while and you're still struggling, the question isn't whether you know enough. You probably know more than enough. The question is whether you're giving what you know a chance to work, or are you interfering? Are you watching too closely? Are you trading too often? Are you making decisions from activation instead of calm? Are you carrying the weight of each trade into the next one? Are you treating outcome as identity instead of just data? Because if you are, no new strategy is going to fix that. No new indicator, no new course. The fix is simpler and harder than that. It's learning to sit still, to wait, to let the market come to you instead of chasing it, to trust your analysis enough to act on it and then step away, to build a rhythm that protects you from yourself. And that rhythm starts with one decision, not a big one, just one trade. This week, pick one setup, plan it the night before, write down exactly what you're waiting for, and when that setup appears, take it, set your levels, and then walk away. Check it once, not constantly, once at a predetermined time. And in between, do something else, anything else. Just prove to yourself that you can take a trade and not watch it, that you can let the market do its thing without your constant supervision. And when you check it, whether it won or lost, notice how you feel. Notice if the outcome feels cleaner. Notice if you second-guessed less. Notice if the loss hurt less because you weren't emotionally invested in every tick. Notice if the win felt more solid because you weren't hoping for it the whole time. That feeling is your real edge, that calm, that detachment. That's what separates traders who last from traders who burn out. Trading isn't about controlling price, it's about controlling your relationship with uncertainty. And the best traders aren't the ones who eliminate uncertainty. They're the ones who've learned to be okay with it, to sit in it, to wait in it, to trust that if they keep showing up with a sound process, the edge will play out over time. They don't need to know what happens next. They just need to know that their process is sound, and that's enough. Because in the end, trading is a waiting game. The person who can wait the longest, the calmest, the most patiently, without interfering, without overriding, without getting in their own way, that person wins. Not because they're smarter, not because they work harder, but because they've learned that in a game designed to make you move, stillness is the ultimate edge. And stillness isn't something you force, it's something you design for. It's something you practice. It's something you become. And when you become it, trading stops being a fight